Again, welcome to the FWLA January virtual event. Please mark your calendars for our next event, which will be an on-site, can't read my notes here, an on-site workshop at Sarah Luther's farm in Waldo, and more details will follow. There will be time for question and answers. Please type your questions into the chat. The FWLA's mission is to provide opportunities for collaboration and education for all generations of women landowners in Florida. We share land stewardship resources through in-person events and virtual networking related to land ownership, including farms, ranches, forests, recreation, and wildlife. Whether you have 1 acre or 1,000, we're here for you. So for tonight, we'd like to introduce our special speaker, Tamara Cushing. Tammy joined the faculty at UF in 2021 with an appointment in extension and teaching. The overarching theme to her work is helping private forest landowners achieve their objectives. Using her background in forestry and business, Tammy works with private landowners and their advisors to provide information needed to make decisions related to forest management. Tammy brings an extensive knowledge of the entire tax system with a focus on the federal income tax code and the ability to translate the information to those who need it. She also works in the area of succession planning, an often overlooked task that contributes to the ability to keep land forested. Her extension and teaching responsibilities overlap in coverage of cash flow analysis, forest economics, and management. Prior to joining UF, Tammy was the Starker Chair of Private and Family Forestry at Oregon State University. She has also previously worked at Clemson University, the University of Kentucky, and for F&W Forestry Services in Georgia. Her PhD is from the University of Georgia in forest finance. Tammy grew up in Palm Harbor, Florida. So please welcome Tammy Cushing.
Good afternoon, everyone. Can you hear me okay?
We have you.
I should say good evening. So I'll get along with what time it is now. So I appreciate having everybody here tonight. I have put together a tax presentation for you. We're going to walk through some tips that I put together to kind of help you think about an assortment of topics within taxes. But certainly, if you have other questions, we could try to address those. I will try to watch the chat. Ginger, I'll be honest with you, I don't know what's going to happen once I hop over onto, put my PowerPoint up, whether I'll be able to see the chat anymore.
We can help monitor, call it out for you, Tamara.
That would be fabulous.
Yeah.
Just
keep an eye on it too.
Interrupt me, and that's great. And I'll try to check every once in a while, make sure everybody's okay. Paulette is putting in some poll questions, and I don't want to scare anybody with the poll questions. I'm not doing anything with the data other than trying to make sure I'm giving the right kind of information to you tonight and seeing where you are. So just take those for what they are. Some of it's going to be very timed to the topic I'm going to go into. Okay. All right, let's see how we do with sharing the screen. This is always the fun part. Okay. All right. You should see a full screen PowerPoint, correct?
No.
Beautiful. Yes? Okay, I see heads nodding. Okay. Thank you for confirming. You never know what's going on. Okay. So we're going to talk a little bit about some tax tips tonight to improve, I hope, profitability on your property. I put these together as kind of what I could do in an hour. That would be some of the highlights of things that I've encountered that are questions or problems for forest landowners. And like I said, if you have questions kind of off of this track, we can go there too. And if it's related to tax changes that are currently starting, I'll do my best on those. I'm still digesting some of what just changed. Most of that is not forestry specific, so we'll try. All right, there we go. So my standard, I have to give you some disclaimers up front. We're educational in nature while we're doing this. I'm not filing tax returns for anybody other than myself. we're going to be kind of high level, especially on this presentation. It gets into a lot of details. There are a ton of details behind everything that I'm going to cover here. I'm going to give you the high points of it. If you have a question that really gets into the weeds on it and needs way more detail, I can either answer that offline for you. I can get you other materials that'll be more easier to digest on some of that, because sometimes the materials out there, especially if you try to read any of the IRS guidance, can be dense. And so I have some materials that are less dense. I write like I speak. So if you think I'm at the right level when I speak to you, that's how I write. Unfortunately, and I teach undergrads and they know this, sometimes the answer is that it depends. It really is just a function of a lot of details specific to a certain situation, whether it's going to apply tax code the way we're looking at it or not. And the tax code is often written really without a lot of detail in it. And so it's based on everything we've heard and interpretation. And I'll let you know if I feel like I'm stretching. I tend to interpret things fairly conservatively from the IRS to stay out of trouble. So if you like to take chances and see if you can push the envelope with the IRS, I'm not your girl. I'm going to read it a lot more conservatively. This is based on what I know today. I think everybody knows this is an evolving world in just about every issue you can name right now. And that is the truth as far as tax law is concerned. You know, we had a lot of changes back in July. Like I said, most of them don't impact us, but tomorrow they could decide to change some provision that's in here. I know that there are some provisions we are trying to actively change, and I'll try to remember to bring those up because I think that's a positive thing if we can get those changed. But I don't know any action anybody's trying to take things away from us. And of course, I told you that this is not tax advice. All right. So if you would pop up that first question, Paulette, if you're ready for it. All right. So do you consider your property a business, investment, personal use, or hobby, or are you not sure? Is that showing up for you all? Okay, thank you for nodding your head. Is it Anne? Yeah, Anne, thank you. You're like, I'm like, okay, good. I can see Anne. I can tell what's going on. So I'm asking you this because this is one of these kind of upfront kind of things that everything else we talk about, knowing whether you are a business and investment, a personal use or hobby, will matter on whether you can or cannot use some of these provisions and how you can use these provisions, and in some cases, how you actually are going to go file. And so I'm not going to get in the weeds on how we file today, but I will talk a little bit about what you qualify for and what you don't qualify for based on your classification. So out of the 7 that are answering right now, pretty evenly split between business and investment. Be really interested once we talk about it if some of you think maybe that's not what I am or what I should be. And those of you that aren't sure, maybe this will provide you a little bit of a, I'm still not really sure, because unfortunately this is one of those things where it really depends. A lot of times it's facts and circumstances. And then whoever put personal use and hobby, it's not going to be good news for you. So I'm sorry about that. So we have these 4, I put these 4 categories. You see, I asked it as 3, but it's really, I kind of think of it as 4, but the personal and the hobby don't differentiate a whole lot. What they get the same kind of treatment for everything, but personal use is more, I go out there and I cut the trees down and I use it for my own firewood, or I build a log cabin off of what's off of there, versus a hobby, which really the hobby stuff came about because of like horses. People would own horses, and horses tend to be a pretty big loss leader in a lot of cases. And so they would have these really expensive horses and they were writing it all off as deductions. And so some of the rules around hobbies are related coming from horses. Unfortunately for us, from the accounting standpoint, when you go and walk and talk to one of those accountants, tax preparers, a lot of times they think that what you do is a hobby. And that is partly your fault collectively. And that's because you walk in there and they say, tell me what you do on your property. And you say, well, it's this beautiful piece of property. We've got this pond up front. The grandkids come and they fish in the pond. We hunt on the property. We ride our four-wheelers. And then eventually you get around to the stuff that we all know is going on out there, that you're working and you're working really hard on it. But we don't tend to emphasize the work end of it. You go in and you talk about all the reasons why you own it, why it's a pleasure for you to own it. And so in their head, that slots right into that hobby category, which isn't always a good thing. All right. Let's see. Let me get back to, okay. So when we look at these classifications, it really considers the frequency of the activity and then your intent. And when I say intent, the intent is, do you intend to make money? If you intend to make money, it's a business or an investment. Okay. Now, if you tell me you have 3 acres and you intend to make money, that's a little bit of a stretch, especially if it's pulpwood type of situation, right? So I'm not saying it can't be. I'm saying it becomes harder. And if you were in an audit situation, you would really want to have enough information to kind of prove that issue that you could actually make money on 3 acres. There is a presumption of profit motive, and it revolves around if you've made a profit in 5 of the last 7 years, 3 of the last 5, something like that. Something that's really tough for forestry, something that we're not likely to meet most times. So there is that ability to have a presumption of profit motive, but often in our case, we're in a facts and circumstances issue, especially if you're not a very large landowner. So you're looking at, do you have documentation of your activities? Let's be honest. If you're a business, you keep track of what you do, right? The shop owner, they have records of what they do, what goes in, what goes out, how much money came in. They have good records, and they treat it like a business. And so if you want to be considered profit oriented and you're trying to make money on it, then you tend to have records on it. And you tend to do things like learn more about how to be better at what you're doing in order to make money. So that's part of what's going to wind up in this facts and circumstances. They're also going to compare to other landowners. And they're not going to compare a landowner in, let's go really crazy, Alaska with somebody in South Georgia, right? I mean, like, those are completely different. They should not be comparing those two things. They should be comparing people in the same vicinity where the markets are similar to see, are the activity levels similar between those two landowners? And so if you barely do anything out there, you don't have any documentation, and then they look at somebody else and they have all this documentation, they're spending all these hours out there, the question is going to be, why aren't you doing this if you're trying to make money? And so the burden does become on your part to kind of prove that you have that profit motive. Okay. So again, this classification question is kind of the key to how we're going to treat losses and whether you can treat losses. And we'll talk about casualty losses later. And then whether and how you take off any expenses related to managing. So I said kind of that personal use hobby thing is kind of ick. And so what they do is they have what they call a hobby test. And so they run down this kind of list, and you want to be able to not look like a hobby, right? So are you conducting it in a business-like manner? I already said that. Do you have any expertise? Well, coming to these kind of events, coming out to FWLA events, learning about how to run the chainsaw, how to do cleanup on the property, how to run the equipment, how to do a timber sale, right? How to manage these things. All of that is part of building your expertise. But it doesn't have to be just you. It's, are you using the right people to do this? Or is this just every once in a while you hire somebody, you don't really know what you're hiring, you just hire somebody to take some trees off, right? So it's, are you getting the right people out there to help you, to show that you're trying to do this like a business would? How much time and effort are expended? This is record keeping 101. Have a journal. How many hours? What are you doing? Okay. You don't get to pay yourself. That's the downside of most of this. You don't get to pay yourself, but you do get to record how much time you're spending and what you're doing to kind of build that case that you're actually working this, despite the fact that you can also have some fun out there. That you have some kind of expectation of appreciation and value. That's fairly easy case for us to make, right? Land prices go up. So if you own land, you expect it to appreciate in value. Guess what? Timber grows. When timber grows, it puts on volume. When timber puts on volume, it puts on value, right? And that's without it even changing product classes. That's without it going from pulpwood to saw timber. It's growing. And so because it's growing, you have an expectation of an increase in value. The entire property increases in value just by you sitting there. So that's a good thing for us. And then, do you have success doing other things that are similar to this? Have you ever done this before? Maybe you've had another property. Maybe you had a business before, and you could show that you do know how to run a business. A history of income and losses. Now, this is tough, right? So, and this is not, any one of these is not going to doom you. It's a preponderance of evidence, right? So if I look at the history of income and losses, and I look at the typical forest landowner, I'm going to take the losses part out of it, but it's a negative, right? For years, it's a negative until you finally get a harvest or you find some other source of revenue to bring that positive. So that one's not going to usually work in the favor of a forest landowner just because of the nature of how our income sources work out over time. Now, if you have a big enough acreage, you might have income on some parts of it, and that'll help balance that out a little bit. But again, that's going to be a piece of evidence that's not going to be a great indicator for us. The amount of occasional profits. Now, this is one that's kind of cool. Think about this for a minute. You can have losses, and they're probably not great losses. They're just across time, right? You're paying property taxes. Maybe you're doing a little bit of cleanup out there, and then all of a sudden you have a harvest. And that harvest is a big up, a big positive. And all along you've had these little negatives and a big positive. That's that occasional profit, but a big occasional profit. That can be a very good thing for you. Financial status. I'm not sure 100% which way they mean for this to swing, but like sometimes we see, I had a client one time that was a dentist. And so he had years and years and years of losses because he didn't have any income from his timberland. And then he had this big ordinary income from his day job, right? And so it kind of starts to look a little like a tax shelter in some cases, and that could be a little bit of an issue. So you want to show that, this isn't what that's about. And again, trying to document that you are trying to do it for money, and you're doing the best that anybody else could do with this type of an asset. And then, of course, the elements of personal pleasure. You don't want that to be so heavy compared to the work part of it, right? So you've got documentation that you're working as well as playing. Again, all facts and circumstances. All right, so that's how we get rid of the hobby stuff, right? We want to get rid of that one. Like I said, it's not really a good thing, but this business or investment, splitting this is also an important thing. Unfortunately, there's no hard and fast rules. I can't look at you and say, yep, you're a business, or no, you're an investment. But typically, smaller forest landowners tend to be in an investment category. And partly that's because if you don't have a lot of acreage, you're only having that revenue once every couple decades, maybe once every 15 years, depending on how often, what your rotation is. And so it's a little bit harder to call it a business when it's that infrequent of an income. One of the ways they look at it now is profit now versus profit later, right? So somebody who is in a business needs the profit now, right? They rarely want to wait for the profit. They have a very low tolerance for long periods of time without a profit if you're really in a business. Investors tend to be in it for more the long haul and hope to have that profit coming later. Excuse me. Is there other income? If there's other income, then it looks, again, more like an investment versus a business because you have some other way. So you're using your money from other sources to work for you versus if you're in a business, you're doing the work to earn the money. And so that's kind of one of the ways they frame it. Again, facts and circumstances, even splitting those two. So I'm sorry I don't have like hardcore answers for you because it really just depends. And you could make a case for it. You just want to be solid in your case and have documentation to back up why you believe you fit in that category. It's not the biggest problem that forest landowners face, but it is something you should be kind of clear on where you land within these categories. Do you have any questions on kind of that fun stuff? Yes, ma'am. Anne, you'll have to unmute. I think I can do it for you. I cannot do it. I think I can do it for her. No, I can ask you to unmute, but I can't do it for you.
Yeah, who are we trying to unmute?
Anne,
Her
Yeah,
question is, what constitutes big and small?
oh, that's a great question. Thank you for asking it. You know, it depends. Sorry. The reason I say it depends, it kind of depends on what's out there, right? So if I was looking at property, and we're sitting here in Florida, but I just need to make a point. So if I looked at a property in Illinois and it's got walnut. Walnut is a beautiful hardwood property, right? That we would use for cabinetry. The value of walnut is pretty high, especially if it's quality stuff. You could be a good, I mean, like you don't have to be a big property if you have good, high quality stuff on it, right? If you have 20 acres of just junky pulpwood here in Florida, then that's definitely small. If you know, so some of it's related to like what's the opportunities for you on that to be able to show it. But you know, I would say there's not a definition of big and small, and there's no real need to differentiate. It's what you're doing with that acreage that you have and what's going on it. And does it make sense? So if I'm on like 1.8 acres. If I was out there trying to harvest on 1.8 acres and say I was in the business, anybody would laugh at me. And so it's just got to be something that you can make a strong case for, that what you're doing meets the intent of what they're asking. I'm sorry, I know that's so vague, and that's the best I can do on that kind of thing. I see the questions now. Thank you. Okay, so Rebecca asked, do CSP, Conservation Stewardship Program, and EQIP payments count as income? I'm gotta make that bigger, I can't read it. As income profit, and do agritourism activities for anything? So now I can't make it go away. Oh, there we go, sorry. Those payments do count as income. Any money that you get, any money at all. This is like fundamental tax school 101. Any income from any source derived is considered taxable unless you can find something in the income tax code that allows you to exclude it or not include it. And so the interesting thing with those cost share payments is the cost share part can be eligible for excluding some or all of it. You do a calculation to be able to figure out how much. And so, but it has to be for a capital improvement project. So something that you would not be able to just usually deduct. So a good example, I had a landowner who built a duck impoundment. Okay, so that is something that's a little bit more permanent in nature, right? Got cost share dollars for that. So that falls under its code section 126. And you run the calculation. And if you'll send me an email, Rebecca, I can send you some information on how to calculate it. Or if you have an accountant, we just need to make sure the accountant knows about that code section. So, good question. Let me see if there was anything else. What constitutes big and small? If land was inherited, does that affect what? No. Okay. So if your land was inherited, it does not affect how you classify it or what you're doing with it today. And so there are some things that matter when you inherit it, but it doesn't matter for what you are doing with it going forward. And here's the really fun part. If you and I both owned it, one of us could be in the business and one of us could be an investor. It just depends on personally what we're doing. So that's the fun part of it. Isn't tax code fun? Let's see, there was something else. Ordinary income or earned income. Anne, can you go further on
Well, can you hear me?
Yes, I can.
Okay. I think it was Rebecca asked about the cost share programs and the money you get from enrolling in conservation easements and all that. Does
Mhm.
that count as earned income or ordinary income, or does it depend?
It does not depend. And so I'm going to take the earned income part off because it's usually ordinary income or capital gains income we
Right.
discuss.
Okay.
Okay, because earned income is usually ordinary income. Earned meaning I worked for it. Let's just say that way of earning it. Cost share dollars are ordinary income. The only time we have capital gains income is when you have a productive asset that you sell.
Mm-hmm.
So it's usually an income producing property. So our wages, the money we receive for wages is considered ordinary income. Cost share dollars are also. Now, if anybody is getting rental payments, that's where it gets fun as well. So the rental payments, so like I'm thinking like CRP. Did anybody ever get CRP payments? Conservation Reserve Program. So those were two pieces, right? One part was cost share and one part was rental to stop you from doing something. So the cost share part would be eligible for exclusion. The rental part is not. So that part would have to all be included in your income.
The reason I asked is when you the retirement account laws have changed a little bit under this administration. So if you have earned income, even if you're 90, you can put it in your IRA, your Roth IRA, or whatever. And but it has to be earned income. It can't be ordinary income. So that's why I asked that question.
I'll have to look that up, but I wonder when they're saying earned income if they're talking about like dividends
Wages,
and
wages,
okay.
what you pay yourself.
Oh, interesting. So yeah, so they're subdividing ordinary income into stuff like
Ordinary income would be like what you get from your investments, like your mutual fund and interests and your stocks and bond interest and all that.
yeah, it's
Earned
interesting.
income is
They're
what you,
differentiating it that way because we tend to talk about ordinary income and capital gains income because there's two different rate structures. There's no
right.
separate rate structure for earned, and so to for them to differ to like for them to take what we call ordinary income and break that into earned, like from my day job and the ordinary income. It's really an interesting approach, but yeah.
You check into that because to me, ordinary means what you get from your inherited IRA. Like I inherited an IRA from my dad when he died. That's
Mhm.
not earned income. So if I wanted to contribute to my own IRA, I'd have to go out, still go and get a job and make that amount to be able to contribute it. So
Yeah.
there is a kind of, and you pay W-2, W-9 to, or
Yeah.
1099.
Yeah, it's interesting. You know, one of the not fun things about tax stuff is language, right? Language
Right.
matters and different
Everything.
people. And of course, the people that write these rules, I'm talking about the people in Washington, D.C., they aren't all have any background on this. You can see it in the conversations you have with them. So they'll put something together, and then of course the IRS writes the actual guidance on it, and that's when the language gets cleaned up and gets fixed so it makes sense to the rest of us. So I am not going to profess to know much about the retirement stuff. I know money comes out of my paycheck, it goes there, and I'm good. And so that's where I'm at with retirement. Sorry. There are some parts of this that get so confusing that I like to stay in my little hole because I can understand my little hole. So, all right. So let's move on. I'm going to skip this. Ginger, what we can do with this PowerPoint is we can put it into a PDF and you can ship it off to everybody if you'd like. And so I'm going to skip a couple of these that are talking about passive versus active. So if you are a business owner, if you are in a business, there are things that they differentiate between whether you're just passive or active, and that has to do with an additional tax, the net investment tax. And so that's important to you to understand some of that. All right, so the next question, I think some people had already started to answer that. Let me see, where did that poll go? I hid my little bar. There we go. I'm sorry, I am trying to, there's the polls. All right, so the second question in that poll, some of you already answered it. If you didn't, I asked about whether you sold timber last year. Sorry, within the last 3 years. There's a reason I asked the last three. You can amend your tax return up to 3 years, right? So that's why I asked about 3 years. Whether you were planning to do it soon or whether you're at least 5 years out or not going to cut. So we have some people who've done it relatively recently, and then some people that are quite a ways in the future before we're going to get it. All right, so let me just pop that back down. So one of the things that's really important to do when you've had a timber sale is make sure that you're classifying the sale proceeds appropriately. So you heard this whole conversation about ordinary income and capital gains. That's why this is important. So how did you sell your timber? You could sell it on the stump, right? Or you can sell the logs. You can cut your own. You can sell firewood. And each of these has different kind of tax consequences related to it. So mostly what I see happen in this neck of the woods is people are selling it on the stump. And that's what we call a stumpage sale, right? It doesn't matter whether it's a lump sum sale or pay as cut, result is the same, that it's going to wind up being capital gains income is what we're shooting for, depending on holding period. If you cut your own or you sell the logs, so let's go back to my walnut example. Walnut, if you think about that big, beautiful tree and you're getting ready to make furniture with it, you want to make sure that that tree has good integrity, right? You want to see inside the log, which we can't do when it's attached to the stump. And so what they'll do is they'll hire a logger, they'll come in, they'll cut trees down and lay them down on the deck. And then the buyers will come and they will buy them on the deck where they can actually look at the straightness of it. They can look at the butt end of it and see that there's no defects in the base of it. And so they're willing to pay more for it because of that. That creates a whole different kind of tax monster that results in ordinary income and capital gains income. And so we don't really do that around here. If that's some kind of sale that you kind of get into or you cut your own, because you have farm equipment and you take it, you have somebody else take it to the gate for you, reach out to me and we'll talk about how that works offline because that's a little bit different monster. Okay? All right. So if you sell it on the stump, which I said most people are doing anyway, and then the question is whether you met the holding period. And so the holding period to get capital gains treatment is 1 year. And we like to say 1 year and a day, just to make sure we clear the hurdle. Okay. So if you hold it a year and you had bought it, then it's capital gains. If you inherit it, we're assuming that you meet the holding period requirements. So that's the nice thing about inheriting it. Day one, you're already at a capital gains standpoint. Okay. If you give it as a gift, it's how long did the person who owned it before you have it? And how long have you had it? So that has to total over a year in order to get the capital gains treatment. Okay. So again, the reason we care about these holding periods and how you're selling it is so that we can get capital gains rates because capital gains rates are better. So they have better rate structure. It's a 0, 10, 15, and 20. I'm trying to remember. I usually just go for the 20. But even the top rate is lower than most of our ordinary income tax rates. And so that really does make a difference. The problem is, even knowing all this, some of the tax preparers are not clued into this particular tax provision. And so I've run into landowners who have had a tax preparer turn it in as ordinary income. And so instead of being at a 15% rate, they're paying at a 28 or 30% tax rate. That's not good. So in addition to that, you wind up paying self-employment taxes if it's not filed correctly. That's another 15.3% tax. So it matters. So we want to make sure that we get this logged in, these sale proceeds logged in as capital gains, assuming you sell it on the stump. Let's just keep it easy. And that you've held it for more than a year. Now, that's not to say if you buy it and 6 months after you buy it, we get an insanely good timber price. The markets are really good. You just have to sketch that out and see if it's worth it. And, do some calculations yourself. If you have a forester, ask them if they think this is just the time to do it. Right now, if we had a spike in prices, I don't think I would probably wait out 6 months just because it's just not been good right now. So if you get good prices, it has to be something you consider. Don't let just this tax consequence drive the entire conversation. So I already said this part. This is kind of the mechanics. So I don't want to bog us down with the mechanics, but it'll be on the slide. It's really talking about how you do it. But you see in here, this references to whether it's a business or whether it's a personal use investment or hobby on how it's going to go through the tax code. So businesses are going through a 631 if it's sold on the stump. These other categories can still get capital gains treatment. It just goes through different forms where it's, you see on the bottom there, if it's a pay as cut sale, if the gains are greater than the losses, it's cap gains treatment. If the losses are bigger than the gains, it's an ordinary loss. All that is the direction you want it to be to get favorable tax treatment. So I don't expect you to digest all of that. Some of this is just information for later. If you need it, you have it. Okay. Is everybody familiar? Are there any terms on there anybody's not familiar with? I do want to just like step out of tax for a second. I have information on there about lump sum sale, pay as cut. Is anybody have any questions about those terminologies? Okay. If you do, pop it up in there and I'll come back and I'll talk about it if we have any questions on that. I did talk about the log sale. Like I said, I don't think a lot of people go through sales of logs. So I'm just going to skip it, but again, you'll have it. It's just more complicated. You wind up breaking the sale into two pieces, the gain from growing the timber and the gain from selling the log. The reason for all that mess is because the tax code looks at the sale of a log as a sale of inventory versus the sale of a productive asset. So when the tree is attached, it's a productive asset. Think of it like a factory. When you cut it, it's no longer the factory. So if you have the sale of the logs on the deck, like the walnut, now you're selling inventory. You're selling the t-shirts from Walmart. And did you have something?
Do you have to pay tax on that, sales tax on the log? The
Typically, that is done by the person that. See, I don't ever cover sales tax because that's not federal. So.
Okay, I got you. Okay,
yeah,
never mind.
Yeah, I mean, probably. But that's a great question. And if you'll just like, if Ginger, if you'll just write that down, sales tax, so that I don't forget to like get my brain back to it someday.
Look that up in Florida stuff. I don't think you have to pay. It's like food. You don't pay sales tax on it.
Yeah, I'm not sure. You know, in Oregon, we didn't have a sales tax. So I never came up. So that's a great question. And because I'm usually talking to an audience that's from more than one state, nobody's ever asked me that one. So that's a great one, Anne.
Sorry.
On it. That's okay. It's okay. All right. All right. So what do you do with these harvest expenses? Because that is always part of the equation. There are expenses associated with the sale of timber. And this is the fun part, right? We can do a cruise. A cruise is just a sample of what's out there, right? Go figure out how much timber's out there. We do a statistical sample of it, right? So that cruise can be done for multiple reasons. I might do it to buy it. I might do it to sell it, hopefully. I might do it for management purposes. And why I'm doing it is going to help drive where I'm going to take that off on my tax return. So because we're talking about sales here, if I do a cruise in order to sell it, that's going to be a sales expense. So I can deduct that off of the sale proceeds along with any fees I pay to the forester who's helping administer the sale. If they mark the timber for me in like a thinning situation, those expenses come off. So right, you're taking your sales price and you're subtracting your expenses, and then we'll talk about basis in a minute, which we subtract that off as well. Okay. So we're going to subtract that from the revenue as the sale expense on Form T. Has anybody ever seen Form T? All right. This is your new favorite, like there could ever be a favorite tax form. But this form is specifically for timber. That's the beautiful thing about it. It is set up. The wording will speak to what you know. So it will talk about reforestation. It talks about acquisitions. It talks about units of sale. All those things that are in there, some words you may not know yet that we're going to put in your head tonight. Depletion, which is kind of depreciation's little sister. So all these things are on this form. It's a beautiful way to keep track of the things that you've done when you've added stuff, when you've taken things out. You don't have to file it under most circumstances, but having it as a record is really good for you. You only have to file it if you have more than occasional sales. So most people don't file it. Okay. All right. The next poll question, which I think you all still answered. Let me pop that back up for my own benefit. Asked, do you know your basis and have it allocated? And most of you, well, more than half of you said you don't know what it is. And that's fine. That's what we're here for tonight. So, basis. This is something really critical for you to know. And this is the best way I can explain it, is it's a measure of all the accumulated costs of an asset that you purchase. And when I say accumulated costs, what did you pay for it and the legal fees that were associated with it? Any part of that acquisition is part of your basis. So that's a purchase capital asset, or it's the assigned value of something you inherit. So when you inherit it and it gets valued for the estate, it's that value, it becomes your basis. Okay. So think of it as what you're in it for, right? If I bought it, this is everything it cost me to have it. If I inherited it, I could sell it theoretically that day, right, for that amount that I inherited it for, okay, roughly. There's some rules related to exchanges. Usually if we exchange property, you take the basis from the property you had before, and you keep that one because that's what you're in it for. Plus or minus money that you paid for it, you know, if you had to pay some cash or if you took some cash in the exchange. And then there's some rules based on gift rules. So I'm not going to get into all that mess, but just suffice it to say that that number is really important. That number is important because when you go to sell the asset, you're going to offset your gain with your basis. So I'm sure that most of you have experience with stock. When you buy a stock and you pay $10 for stock, and it then goes up to $70 for stock and you sell it because you're brilliant, you don't want to pay tax on the $70. You want to pay tax on the 70 minus what you paid for it, the 10 or 60. So that same concept carries over to what we have with forest land. So we want to be able to know what that number is and be able to use it later to offset that gain. So time of sale. It's also important if you have a theft. We don't want to have that happen, but if we do, or if we have a natural disaster, how we help determine what the amount of your loss is tied to that number. So you need to know that number. It's not something that like you need to be able to like, this is my basis, but it needs to be somewhere where you could get it, right? So if you don't know that number today, I'm going to charge you with making sure that that number is somewhere, because often what happens when I asked about the allocation, it's because when you buy land, oftentimes you're buying the land and you're buying, there's timber already on it. We want to split that purchase price out among the land and the timber. And so your basis is really for each asset that you acquired at that time. That's the part that's what most people haven't done. Yeah, I paid this amount for the whole thing, but they haven't actually split it out among the assets. So if a hurricane comes through or an ice storm or tornado, whatever it is, and it takes out the timber, you need to know the basis of the timber. What did you pay for the trees? And that's a number that doesn't change over time without an input or a removal. Okay, so it doesn't get bigger over time. It's not indexed for inflation, sadly. I wish it was. It's not. So no indexing for inflation and no indexing for increases in value. So the fact that it got bigger, it crossed into a better product class, that does not get you an increase in basis. That number is set at what you pay for it or what you acquired it at, plus any inputs and subtractions for any other things. And we'll talk about that in a minute. If you have an exchange, that number is going to be used to affect the basis in the new property. So you need to, again, know what it is. And then in the case of death or inheritance, it's not important that when my grandmother died that she knew that they knew what her basis was. That doesn't matter. That kind of clears the deck at that point. when grandma dies and I get the property, that valuation is date of death value. And so we basically start over. So that's kind of a reset of that basis. It's a very good thing. And we can turn around and sell it right away and meet the holding period and get the capital gains treatment on that gain that grandma sat on over the years. So it's not a number that's essential in the case of a death. But if you're doing succession planning, that number is critical, right? Because I'm thinking about who do I give things to? Maybe I'm trying to remove things from my estate ahead of time. Then I might need to know, like, what is that basis in that so I can gift it now instead of waiting till death. I just said that. All right. So I kind of alluded to some of this. I want to make sure I said it all. Purchase property, it's the total amount you paid, the attorney fees, commissions, sales taxes. It's not indexed. So I said most of that. I said that if it was inherited, it's the fair market value at the date of death. So that number, as you go through the probate process, they're going to look for an appraisal in most cases. But there is an alternate valuation date. So if my grandma had a ton of stocks and then 6 months after she dies, the stock market tanks, that would affect the entire value of the estate. We could revalue the estate. At that time, the entire estate would be revalued. So that could be the number we're looking for instead of the date of death value. There is a little tweak in here for stands that you plant. So typically, the basis in a stand you plant is your expenses of the planting. So again, it's not your labor. So if labor of love, you go get the dibble and you put all those trees in the ground, you don't get to count your time and effort. It's what did you pay for seedlings? What did you pay somebody else to plant? If you did bedding, all those expenses. And we typically say within the first couple of years, till it's kind of free to grow, what were the expenses associated with that? Okay. And there's a way out of it, which is why there's an asterisk, and we'll get to that later. Gifts and exchanges, again, there's various rules. If you're in that situation and don't know how to figure out your basis, I'll send you some information on how to figure that out. Your accountant would know all of these rules. These are not forestry specific. Again, everything is established at the time of acquisition. But if you're sitting here going, whoops, I didn't do it, I don't have it, we can retroactively determine basis, especially if you haven't split it out or allocated it among timber and land. We just really need to, you probably need a forester. We need to grow the timber backwards, right? If you've thinned, I need to grow it backwards, add the thinning volume back in, and then grow it all backwards to when you got it, and figure out what the condition of it might have been. It's great if you have an inventory, that's even better. But we can grow it backwards. We would be looking for timber prices at the time you acquired it. We have ways of doing it. If you don't have that information and you need it, you are likely going to have to pay a consulting forester to help you do that. That is a service that they're going to provide for you. But it's not extraordinarily hard. It just can be a little time intensive. I did say that basis isn't static, but it's not indexed, but it's not static. So if I do something to the property that I cannot otherwise deduct, that would be added to my basis. If I sold timber, lost timber from a casualty, that would subtract from my basis if I took a loss or did a sale and started using some of that basis up. You can see here just a little bit. This is how I calculate it out. It's not a really tough process. It's about having the right inputs. So if I had a property that had multiple asset classes on it, so you see here merchantable timber, land, and pre-merch, right? I need to determine what is the total fair market value of all the assets, because what I'm going to do is kind of proportion out what the assets are each worth for what I paid for it. So if you look at that fair market value column, price times quantity, for the most part, is going to help me get the merchantable timber. The land, you have to have some kind of idea what the land, bare land is trading for in the area. This doesn't have to be precise, but you have to have a pretty good idea where this is coming from. It can't just be pulled out of thin air. And the more you put on the timber, the more it looks like you're trying to give yourself an advantage, right? Because it's to your advantage to put as much basis on the timber. because you would sell that first and offset gain. So that's where you would get in a little bit of trouble. Pre-merchantable timber, you probably need a forester to help with that. It's not that it's extraordinarily complex, but it does involve using some growth and yield ideas and kind of growing it to a point where we can figure out what it would be worth in the future and then discounting it back. Not all foresters know how to do that, so they may not be able to help you with that. You just need to ask if they can do that. So I added it all up, got a total fair market value for the entire property of 125. If I paid $100,000 for it, all I'm going to do is start like figuring out what proportion each of these assets contributes to the whole. So that middle column, the percent, is just $50,000 divided by 125. So the merchantable timber is 40% of the fair market value of the property. I do that for all the pieces and then apply that percentage to what I paid for it. So in this case, I paid $100,000 for it, multiply it by the 40%, and I would put $40,000 in the merchantable timber account. If I turn around and cut it tomorrow, I'm going to pay gain on $10,000. But that is a fair way of doing it. The IRS has seen this method. The IRS doesn't have a problem with this methodology, provided you can provide information on where your fair market value numbers came from. That's the only thing that will get you in trouble. Any questions on that? All right. Sorry, didn't need to jump back. All right. So what we're going to do with that basis is we're going to use that basis along with the sale expenses to reduce our sale proceeds to ultimately reduce my taxable gain. That's the name of the game, right? Pay less, okay, legally. So you see here kind of the equation to get there: sale proceeds minus sale expenses minus depletion. Depletion is a fancy way of saying your basis that you are applying to this particular sale. And I'll show you how to do that. So depletion is the recovery of the basis for the timber. So depreciation, right? We use that with equipment. And we start depreciating equipment the minute, you've heard this, you take your car off the lot and it starts depreciating in value, right? If that was a work vehicle, you start writing it off, taking expenses on it immediately. With timber, you don't get to do that. You only get to take the timber basis back when you start selling timber. So what we're going to do here is recover it in proportion to the timber sold. So remember when I said we needed to split the basis out? Once I split it out and I start selling timber, I'm going to start using it out of that particular timber account. So we're going to calculate the depletion for each account. And all we're going to do is take the number in the basis account, the dollars, and divide it by the volume that's in that particular account. Okay. So I know that I had $40,000 in that merchantable timber account. And I went out and we had a measurement of how much timber is out there. And I'll do that division and it'll tell me $1 for every ton of saw timber that I cut. And so for every ton of saw timber I cut, I'm going to recover that many dollars as an offset against sale proceeds. Now I'm going to show you with some numbers, so maybe it'll be a little bit clearer. All right, so if we look at an adjusted basis of $5,000, that's just what's in the account. The total volume of timber that's out there, I have 800 tons out there. If I divide those two things, I get $6.25 for every ton of timber that is sold off of that particular basis unit. Okay. So that's really all there is to it. The important thing to remember is once you've done that calculation and you do that timber sale, so I multiply however much timber I sell times that $6.25, and that'll come out of the sale proceeds minus the sale expenses, and that's what's left is the taxable gain. You've got to remember to go into your basis account and remove those basis dollars. You've used them. They've got to come out of the account. Just subtract them out of your spreadsheet. Okay. If you forget to do it, if you have a thinning and you fail to take the depletion and you're outside of the amending period, that 3 years, you will lose those dollars. Those basis dollars are use it or lose it. So if you thin and don't do it, they go away. You just have to subtract them and you didn't get the benefit of them. So it's a mistake. If you catch it within the 3-year period, you fix it. If you don't, you subtract it, slap yourself on the wrist and learn a lesson. All right, my next poll question, where did that go? I keep losing my little bar. Was about reforestation. I asked if you planted trees and how many of you planted in 2025? Who planted in 2025? All right, so whoever planted in 2025, pay really close attention to this next part. If you're going to do it in the next couple years, this is also going to be really important for you to listen to. If you did it before 2025, you can't fix this one, okay? So if you do reforestation, the tax code allows you to deduct up to $10,000 worth of reforestation related expenses per qualified timber property per tax year. Okay, so the person who did a planting in 2025, you can deduct up to $10,000 worth of reforestation related expenses from your 2025 planting. Okay, what that means is it's not going into a basis account. That's brilliant, because when it goes in a basis account, it sits until you harvest. It's in and right back out as a tax deduction. Anything that goes above that 10,000 in that tax year. So if that person has gone over that $10,000 that year, they spent $12,000 in reforestation, they'll take $10,000 off through the deduction, and then that 2,000, they will immediately start writing some of that off over the next 8 tax years. So at the end of the 8 tax years, you still have nothing in your basis account for that stand of timber. That's really good, and it can be bad if something bad happens, okay? So as long as nothing bad happens, you've gotten the tax benefits back in your pocket right now. That is preferable to leaving it in a basis account, and when you harvest timber starting 15 years from now, if you know anything about compound interest, you know that you'd rather go ahead and take the tax deduction today. Okay. The big warning, whoever did it, whoever planted this year, and whoever's planting in the future, you cannot fix this on an amended return. If you planted in 2025, when you file your tax return this year, this April, you must take it then. If you don't, you have 6 months to beg forgiveness. There's some kind of like revenue ruling you write on the top of the form, but that's it. After that 6-month little fix, you're done. You have to sit on it. It stays in your basis account till you start selling. So that's why I asked you if you had harvested before 2025, it's already gone. You can't fix that. That is done. So if you if you planted in 2024, did not do this, you can't fix that error. It's gone. Okay. It's like, if it gives you any heart, if it makes you feel any better, I had people come up and tell me they didn't know this and they didn't do it in Oregon, and they're on like a 60-year rotation. So that's a really big error. And unfortunately, it's one of these things that the tax preparers aren't aware of a lot of times. So you almost have to go in and say, hey, I did reforestation and I understand there's a way for me to take this off right now. So be your own advocate on this one, because they miss it. It's code section 194. You can point them at it. If they tell you you don't know what you're talking about, you can't remember the number, send them to me. I will tell them exactly where it's at. This is one of the things that when I said we're trying to advocate for change, this is something I'm trying to get changed. So I know that a bill has been written by a congressman in Georgia to get rid of that amended return problem. So if I could get that done, I consider that a big victory. The other part is we're trying to get that $10,000 number to hitch up a little bit. It's been at $10,000 since 2004. So it'd be really great if we could get that number increased. Recapture. That's the ugly side of this. The tax code giveth and tax code can take it away. This is that situation. So if I do this, I plant trees, take the $10,000 deduction, and then in 5 years, I sell the tract, I owe the IRS for the tax savings. So they will come back and grab at it, because it's meant to keep things green So they're really trying to make sure it's benefiting. So if you think there's any chance in the next 10 years after you do this that you're not going to own the property, and I don't mean by like, if it's an inheritance situation, it's fine. The problem is if you try to sell it. And so if you think you're going to sell the property within the next 10 years, then you do not need to do this. Just put it in the basis account, and then when you sell it, you'll take it off the sales price. So the smart thing to do is straddle tax years, right? Operations happen in multiple tax years. So in the fall, you probably did maybe some cleaning up of the property to prep for planting. And then, you know, we tend to plant pretty early. So we're planting in January. All you got to do is break the tax year, right? Do the site prep in 1 year, calendar year. We can talk days. I can do it December 30th and January 2nd, right? I can plant in 1 year and I can site prep in another. And what that does is because it's every tax year, I can get $10,000 up to $10,000 deduction in each of those years. So we do it anyway. So use it to your advantage. So if you have the opportunity to plant in December, you should wait if you've already done site prep. Again, you'll have these slides so you can see it, but this is part of Form T. You can see it's friendly reforestation and timber stand activities. What did you do out there? What is your stand ID number? What operations did you burn? Did you chop? Did you spray? It's all in our language. And then total number of acres that you were treating. This is Form T. It's 3 pages, 4 pages. I'm not even sure anymore because I cut it in pieces, so I can't even remember. Reforestation goes on its own form. It goes actually with depreciation to amortization. So anything that goes over the $10,000 winds up filtering through this form right here, which is a business type of form. You don't have to be in the business to do this. You do have to be doing more than 1 acre, and it has to be for commercial timber production. So if you're just planting windbreaks, that you cannot use this provision for windbreaks. Can't use it for Christmas trees. I don't think anybody does Christmas trees around here, but if you do, you can't use that. All right, deducting expenses. Businesses can deduct all ordinary and necessary expenses for production or collection of income. That's pretty standard. Investors, anything that's for production of income, so management or maintenance of property. But do you remember the Tax Cuts and Jobs Act suspended miscellaneous itemized deductions? All of that was where investors were writing off those expenses. And so what we're having to do is capitalize them as development costs. So in years that you do not have income, you need to make the decision to do it like a carrying charge. So your property taxes can go separate. We have a separate mechanism for property taxes, but any of your, if you do pre-commercial thinning, fertilizer, any of those expenses, you're going to have to decide to capitalize them as an investor. This is why that category mattered. It's not the best situation right now. I was actually hoping that of all the provisions that they had temporarily suspended, that this one they would change their mind on and let it expire, and they didn't. So we still have no miscellaneous itemized deductions for the most part. If you're a hobby, this is why I asked you if you're personal use a hobby, your expenses are not deductible. Not at all. You just eat those. So when we talk about maintenance, ordinary and necessary for operating expenses, we're looking at industry standard. What does everybody do? Like what's normal operations out there? If you're doing something really fancy, you're out there pruning the trees, that's not really industry standard here in Florida. It's industry standard in other places. So it is kind of specific to where your property is. Again, profit motive, looking at appreciation value, managing and maintaining the property. This is not anything that increases the value, just stuff that's maintaining. And of course, you would deduct that in the year of the expense. Again, I talked a little bit about this for the investors, but when you have a non-income producing year, you can capitalize the expenses. You make an election to do it in non-productive years. This would be any of your property taxes. If you did pruning or pre-commercial thinning can go in there, but it's being consistent, and there are rules about being consistent related to your expenses. All right, I did have a question about this, and I need to see how we answered this. Destruction of timber, nobody did. Thank goodness. Okay. So the reason I asked about that, you know, we are in a state that does have, unfortunately, activity more frequently than we would desire. But you can deduct casualty losses. It's not good. It has to meet certain criteria, which any hurricane is going to meet that criteria. We're looking for sudden, unusual, and unexpected. And so this is really excluding things like insect attacks unless they're of a crazy proportion. Just don't try it with insects. It's really hard with the insects to meet the threshold. But if it's a wildfire, a tornado, a hurricane, if you have property elsewhere, or if we get a crazy ice storm here, all those things meet the criteria. You've got to be able to document it. By document it, pictures of the property before you do cleanup. You want anything from the news. So the National Weather Service, it will show you that there was an event. You need documentation that there was an event. That's not usually a problem for us to prove at this point. Here's the hitch. If this is personal use property for you, it has to be in what's declared a presidential disaster area. That can now also be, I think, effective this year. It can be in a state declared disaster area. So they've kind of changed that wording a little bit. If you're a business or investor, you don't need to meet that criteria. So some of these smaller events that don't get declared that way, I think nowadays they're declaring a lot of things. So it's a little bit easier to get there. But what they do on this personal use, there's some limitations. They take a cut right off the top. There's some percentage limitations. It's just messier and it's harder, and you're not going to get near as much back as if you were considered a business or an investor. So the rules, and these rules stink. This is another thing we're trying to fix. It's the lesser of the decrease in the fair market value. So that's what was it worth the day before? What is it worth today? Right? So that decrease in fair market value, that's usually going to be a pretty big number, right? Or your adjusted basis, which probably isn't a very big number. And so that's kind of the problem. Especially think about this. If you did reforestation, you took that reforestation incentive I told you about, your trees grew up, and then a hurricane takes them out. You have zero in the basis account. You have zero casualty loss per the tax code. It's ugly. It's not right, but it's the way the code reads. There's an organization working really, really hard to change this. It has some bipartisan support, but they're having a hard time getting it attached to anything because we don't have a farm bill right now, right? So without a farm bill, that's usually what they might attach something like this to, but they're continuing to try to get this provision altered to make it more favorable for forest landowners. The present approach is to do fair market value would be what you could deduct. So fair market value loss, which would be huge, regardless of whatever your basis is. If you get proceeds, so you manage to salvage it, you feel like getting some money is better than nothing, that could actually result in taxable gain. So you would have to turn that in as income. It could give you a gain, but you can you can take that gain and take an involuntary conversion. So a section 1033 involuntary conversion, and you can roll that gain over into replacement property. There's a whole bunch of rules about timing of identifying the property and acquiring the property. It doesn't have to be identical, but you're looking for something that meets specific criteria. So like out west, what I saw happen after one of the fires, the property burned, the timber burned, the company salvaged it, took those proceeds, and because they now didn't have a 20-year-old age class within their distribution, they went and found property with a 20-year-old stand on it, and they bought that as their replacement property. So they still had fair land now, but now they had a 20-year-old stand. And so they were able to roll that gain over, and that gain becomes part of the history of that new stand. So you can do it. There's just paperwork you need to file. And then, of course, I put a note on here, loss is calculated based on record keeping unit. So again, how you break that basis out is going to determine your loss unit. Somebody asked about cost share. Told you that already, what cost share looks like. Make sure this question. CPA. Okay, I'll get to that. I will answer that one, Kara. That's a good question. Other income, no matter, again, what the source, we talked about cost share and how that would get treated. Does anybody get sell pine straw? We have hunting lease income. Some people might have carbon payments now. And payments for ecosystem services are coming out. I remember hearing about the Panther one at one of our workshops. All of those are income, and in most cases, and anyone that I can think of right now, they're ordinary income. So they're not going to get that capital gains treatment. They're going to pay at that higher rate. But it is a way to have income in the meantime. As I start rolling through the end here, keep good records. That's really, really incredibly important. If you get into an audit situation, you want to be able to document everything. Keep all your receipts, all your invoices. The more of it you have electronically, the better. I like to joke about, the thermal paper. A lot of our receipts are on now, and people throw them in the truck. And after like 2 weeks, there's nothing on the paper anymore. Take those receipts, scan them in, have a filing system for yourself. Keep everything at least 3 years, because you can amend your return within those 3 years. You want to make sure you have that. If it's a capital expense, so you pay to plant trees, those are capital expenses. You keep the receipt as long as you have the trees. Okay. Now you understand why I say scan it in. Okay. All right. So here's some resources for you. I don't want to forget that question. Here's some resources that are available for you. Tax tips. I put 2024 on here. 2025, we're waiting for the Undersecretary for Natural Resources to sign off on it. Somebody big in U.S. government, we're waiting to sign off on tax tips for 2025. So as soon as that comes out, I'll make sure that gets sent through the group. There's a hardwood timber industry audit technique guide produced by the IRS. That is for the auditors. So when an auditor shows up on your property, they should have actually read that. Forget the fact that it says hardwood. It really teaches them about forestry. And it's really kind of bringing to mind things that they should look for, so that they might audit a pig farm one week, a sports bar, and then show up on your timber property. And so there's these guides really kind of help them hone in. You should look at this if you're going to go through an audit. This is the kind of guide you read so you know what they know at a minimum. And so like I said, it was written by the IRS, but it's got some good information in there. The Forest Landowner's Guide to the Federal Income Tax. You can't get it in print anymore, but you can still Google it and pull it up. It's an ag handbook. We are 5 years into rewriting it. The final draft is in my desk. I'm hopeful that before we file next year, you'll have a new guide. But it really talks your language, but it also explains all the stuff on the other side. It's a great thing to point out to the tax preparer or accountant who's unfamiliar with the industry if you're finding somebody new. And then there's some, you can Google this Woodland Stewards Tax Webinar Series. January, February of 2022, we did a series of webinars. I think there were 5 of them in total. Like there was a whole one on expenses. There is a whole one on looking at timber revenues and how to handle that, done by myself and a couple of others within the industry. So those would be good resources for you. They're free. I think you just have to give them your email address. So to Kara's question about a list of CPAs. So unfortunately, I'm not allowed to do that as a public employee. So that, yeah, I know, darn. In some ways, I'm kind of glad I'm not allowed to do that. That's kind of a loaded thing, right? Like I would not want to attest to somebody being knowledgeable about it. Once upon a time, I do still teach this to CPAs when they come to things for credit, but I don't know how much they took, whether they were tuned in mentally the whole time. So I don't want to attest to that. Usually if you can find somebody who has an interest, they'll work with you. I would say you just don't want to be the guinea pig, right? So ask somebody if they've done it before. My favorite thing to tell landowners is to ask another landowner who they use, right? and start gathering that information. If I ask those of you that are in here who you use and you all use the same person, bam, that's where I'm going. Because either that person is doing everybody wrong or they're actually learning and they're doing it right. And so the power of asking people that are in similar situations is really, really big. So that's what I would recommend. So no, I don't have that. I'm really sorry.
Okay. Yeah, the situation we're in is our accountant is getting quite elderly and he is from the timber industry, but he's going to retire and not do it anymore.
Have you
So
asked him if he knows anybody that he would recommend or he thinks he'd want
we'll
to
be doing
learn?
that. Yeah, we'll be doing that this year.
Perfect. And there are some classes that are available out there. I know that there's a guy from Oregon. He's a forest landowner. He was actually National Tree Farmer of the Year. And his family has owned forest land for years. And he was a CPA. He is a CPA, but he's retired. But he's done some training sessions that through some national organization that a lot of them belong to. So if that person wanted to learn, they could find these classes. So, and like I said, I've got materials we can hand the person if they're willing to learn. I've got some videos out there. So a lot of it's not rocket science. It's just making sure they understand. Like I taught a workshop with I think there were 200 of them in a room. And I said culverts and they didn't know what I was talking about. So if you walk in and you say something and they don't know what it is, now, I mean, nowadays you can look it all up, but they've got to look it up. But if they don't know what it is and they probably don't know how to treat it, they might treat it incorrectly. So, what other questions do you all have? I know that was a lot of information that I gave to you.
Hello, Dr. Cushing.
Hello.
My name is Bianca. First of all, I want to thank you so much for this presentation. I am currently the second generation to take over my parents' property, and we've been looking and trying to find someone that is knowledgeable in this area that can even just point us in the right direction. And so I just wanted to say thank you so much for doing this. I don't personally have an accounting background, so I would just like to ask a few questions about basis
Sure.
and the date of death value. So if I'm understanding it correctly, the basis was just the cost of the initial cost of the initial plants or the trees we used to plant, and then maybe like the herbicide that was used to keep the weeds down around them, that treatment that comes with all that, and that's it, right?
Yeah. So the herbicide, you can write that off as an expense, but if you can't write it off, then you could add it to your basis account. So yes, but that would be for a reforestation job. So the date of death, so to go back to the inheritance thing, if I inherit it from my grandmother and they value it at the date of death, that's just standard estate tax processing when you go through probate, is to value things at date of death. And so all the estate would be valued that day, including the land and the timber. And so the only thing on that would just be to make sure that you have those numbers and those separated numbers. If you buy it, that's when you know what you paid for it and you know what you paid for all the expenses associated with acquiring it. That's what you then are going to try to split out and allocate to determine what did you shelled out $100,000, but some of that was for the timber, some of that was for the land. And it's not ever written down anywhere what you paid for each of the assets. That's not how we do things, right? You just pay for it. And so that's when you have to start kind of pulling that apart, figuring out what the pieces are worth.
In order to find the deductions, right? Okay.
So in order to find out, once I know what I paid for the timber, when I start selling timber, I can start offsetting my revenue with my basis, right? So I can start getting my money back, paying myself back first before I start paying the IRS for the gain.
Oh, okay.
Does that help?
I see. Yeah, I see. It makes a little bit more sense now. Okay, thank you.
Yeah, you all have my email address. It was up there on the screen. At any time, send me an email. I'll do anything I can to help you if I've got resources. I write for several landowner magazines, and it's written kind of like almost single topic, but it's written not in a whole bunch of tax jargon. So if I can send you those type of articles to help you with it, or if we just need to jump on Zoom and just hash it out, and I'll say it 6 ways to Sunday, and maybe one of those ways will connect. So I'm happy to do that for any of you.
Perfect. Thank you so much.
Absolutely. What other questions? So I asked you questions as we were going, but I would like to say that I'm going to send a survey, a little follow-up survey out, and it'll be at least a month, but just to see if you've done anything different. One of the things about the kind of job I do is they like to know that like you learned something, but it made a difference, right? And so I'll just be poking around to see if you learned anything, and if you have done anything different after what you learned today.
We did have one more question about how often should you get a cruise report?
Oh, that's a great question. Okay, so you not going to be satisfying. Okay, you get a cruise when you need one. Okay, like I said, not very satisfying. Okay, so if you're going to buy a property, you want some kind of indicator of what's out there. So that's kind of when I would cruise something at one level, just to make sure I'm not overpaying it. If I'm going to sell timber, that's when I want to, the forester in me is telling you, if you're going to sell timber, you need to know what you're selling. So you need to know quantity of what's out there, quality of what's out there, so you can estimate the value before somebody comes in and makes you an offer that is too low. That happens. And I'm going to tell you, I know we're recorded, but this happens to women often, where they will show up and they will say, I will give you X for this timber, and it's worth 3 or 4 times that. So that is something I would highly recommend, is to know what it's worth. Pay for the cruise before you put it up for sale so you know what it's worth. Now, in between those time periods, you cruise it when you need to make management decisions. So I'm getting ready to have a management plan done. I would have somebody cruise it at a management level, so I don't need to have exact numbers. I need to have a good enough idea of what's out there so that I can think about what I'm going to do going forward, right? So I've written a management plan. We're 10 years down the road. Some things have happened. Maybe I didn't do things when I said I was going to do them. Maybe there was a little bug patch over there. Might be time for another cruise to kind of make sure that I understand progress of what the stand's done, what Mother Nature has done, because everything in the original management plan was a prediction of how Mother Nature would grow my trees. And you know what? They're models. Models are just that, right? It's ideally how this would work. You know, we had a drought, right? So the trees grow differently in a drought, bug kill, whatever. So you don't have to do it like every year. You don't have to do it every 3, 5 to 10. Just you kind of have to play it based on what needs to happen. And if you have a forester, they should be making a recommendation for when they think it's time to run another cruise to get a better idea. And they may not cruise the entire property. They may just cruise one part of it. Hey, I think it's time to do a sale on this part. So let's go ahead and cruise this part for the sale. Or, you know, this part had something happen. I think we should go recruise this so I have a better idea what's out there. And they don't have to do it real intensively, so it doesn't have to cost a ton of money.
Yeah, we
I hope
did have
that helps.
another question, just bottom line, what is a cruise report?
Thank you.
Perfect. I'm sorry, and I wish I would have seen that question in there. So a cruise is just a survey, right? It's a statistical survey of what's out there. So I could go out there and I could count every tree, right? I could look at how big the tree is, how tall it is, how beautiful, straight, crooked, forked, whatever it is, and get some kind of indicator of kind of what's on the ground. So that cruise, like I teach an undergraduate course right now. Ginger's come and talk to these students, but they are writing a management plan. And so they were out there yesterday. They wandered the property. They took some mental notes. Their job is to go out there and measure trees, but they're not going to measure every tree. They're going to measure enough to have a statistically valid sample to understand what's out there. And so part of that is designing it in a way that makes sense, that you don't put oh, there you go.
There you
There's a
go.
measurement tool.
I'm trying to find something that'll make it. There we go.
Make it show up better.
There
So
you go.
that's an angle gauge. So they'll go out and they'll use something like that to see which trees are in or out of their plot. And it's proportional to the size of the tree. So they'll go out there and do that. And they'll be able to come back and say, this is what's out here, plus or minus. So there's some statistical indicators, confidence intervals. I don't know how well anybody remembers or wants to remember their statistics days. But they'll put some parameters around confidence and what's out there. And of course, if I'm going to sell it, I want to be more confident. If I'm just making a management prescription on it, may not be as much. So that report, that cruise report, is going to kind of tell you what the inventory was, like how it was designed, and then what they found out there. And yes, the forester can do the cruise report. You can usually get someone like a consulting forester to do it. If you don't have one, you can look. I send people to the Association of Consulting Foresters. You can look in there. There's a directory in there for Florida, if that's where your property is. If your property is outside the state, there are consultants in every state. They're held to an ethical standard. That's how they're in that organization. They have continuing education requirements, and they have a base degree requirement. So it's not a doctor or CPA, but there's requirements to get into that organization of what they have to know and how much experience they have. Each one of them has some specialties. Some do appraisals, some don't. So you just kind of want to read through that. But yeah, your forester can do that. State agency foresters can do some work for you. There's a limitation to how much they can do. Usually there's a kind of a little bit of a wait for them because their services are free, but they can put together a stewardship plan for you. So hopefully that helps a little bit.
Yeah, because I think a lot of folks, which we're just getting into it, it's more terminology. It's very
It is.
industry specific. One question we'd like, just for everyone that's participating, if there is more than one of you on your Zoom link, please put the number at your location in the chat, because we'd like to get a count of how many people who were able to participate. So I know there's a few folks there's more than one person listening in on your one connection. Would appreciate it. Are there any other questions? Okay. Does anyone have any other questions? Okay, well, it is 8:30. I'd like to thank Tammy very much for taking an hour and a half out of your evening and giving us some more education. And for everybody else, this is just one of the numerous things that the FWLA tries to do. Again, if you have any questions, feel free. Tamara's been an awesome resource for us, all the way from the very beginning kickoff of the FWLA meeting that we had back at Austin Carey, and she did a wonderful presentation on estate planning. And that's so, which is another thing we may tap her to do for us again, because it has been a couple of years. Very interesting topic. She's put her information on the chat there, and we'll be sending out a survey to get some feedback. That's one thing, as you participate in things that are put on by IFAS, that you will get a survey, because that is part of their mission. A lot of their funding comes from the fact that they can actually quantify how they have helped people with their business or their personal or their hobbies or whatever else it is. They're not just doing just research in the dark there. There's actually a monetary value to what they do. And it makes it worth everybody's time and effort to put these programs on. So thank you very much. And thank you very much for attending, and stay in touch.